Hey guys, welcome back to the channel. In this video, I'm going to go over a portfolio update as well as revisit some market predictions I made and how I'm going to continue investing in August. As always, don't forget to smash that like button if you like this type of content so the algorithm gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, you guys know I have to hit you with the disclaimer to appease these YouTube gods out here. This video is for entertainment purposes only, not financial advice. You should always consult a professional. All right, with that out of the way, guys, let's get into this juicy video. All right, so not too long ago, right? Maybe about almost a month. All right. So I made a video called Liberation Day 2.0, how I'm prepping for a massive stock sell-off, right? And then Liberation Day came and basically we, suffered through Liberation Day, right? Presented a great buying opportunity. But there was a lot more information in this video that I hope some of you guys were paying attention to. So let's see how my market predictions actually came about and we'll go from there. All right. So this was a video, right? This was the video Liberation Day 2.0. And in here, on top of the, August 1st, Liberation Day 2.0, we also were moving into August, which is, traditionally down month. So let me show you guys this chart, right? So this is the S&P 500 index seasonality chart. I shared it in the video. We'll just take a look at it right here on the screen. So right here on the screen, I shared that we were moving again into August, and August has typically been a down month, all right? Mostly you have people who are selling, taking profit. You have a lot of these, big traders, these market movers, these huge trading desk firms. Everybody is going on vacation. So typically August is going to be like a low volume, low trading, time, right? It's just, there's not a whole lot of action going on. So again, what we're experiencing right now is really not out of the ordinary. I don't know why so many people are freaking out. My hopes are that, this video will kind of calm the nerves of people and just let them know like, hey, this isn't the end of the world. Now, losing money in the stock market is never fun, right? Losing money, seeing red in the portfolio is never fun, right? But this is just what investing is. This is part of the journey. This is part of the game. Okay. And again, we're not out of the woods yet. All right, we're midway through August. And again, August has typically been a down month. All right, according to the statistics down below, usually we see a max or a max return of about 7%. That happened in 2020. But we saw also a 6.3% decline in 2015. And there's a 55%, let's call it a probability that we're not even going to have a return. We'll trade flat for August. All right. And then again, we're going to move into September. September is not that far away, so who knows what we'll see. Again, we have some really big things happening this week. We also have, the Federal Reserve speaking at Jackson Hole August 22nd. That right there is going to set the mood for the rest of this month. All right. And definitely into September, because if Jerome Powell comes out and starts talking about being hawkish or dovish, that will really set the tone if we're going to get a rate cut or not. Honestly, having a strategy around rate cuts is not a good strategy at all. You really should be investing in companies like, and trust, that you have a long-term thesis on, or, if you want to take it easy, invest in an index fund, right? Invest into an index fund. All right. So this is, again, just the S&P 500 seasonality chart. I just wanted to show you guys that real fast. All right. So let's take a look at my portfolio. All right. So my portfolio absolutely hammered this day. Absolutely hammered. Just blood red across the board. I lost so much gains in PLTW and NVDW, right? My opinion, if I wasn't so overweight in PLTW, I'd probably be adding to it right now, but I'm way too overweight, so I don't want to be adding to it, but I did pick up some NVDW. But anyways, let's talk about it. Over this last week, I am down $30,000, okay? I basically gave up all of my gains for this month, right? This was Liberation Day right here. And, I made some big purchases here. We gained. Everything was going great. And now we've plummeted again, back down to earth. Now, again, going back to this video, right, you see it almost kind of matches up, right? It almost kind of matches up. We'd see this sharp decline. So again, this is not scary. This is just seasonality, guys. This is just the market being the market. Doesn't mean sell everything and flock to cash, all right? This is not the sky is falling. So Let's talk a little bit more about this portfolio. All right, so right now I'm sitting on $18,000 of buying power. Again, in this video, I showed this chart, right? How I was preparing for this eventual downturn, or whatever you want to call it, seasonality rotation, right? So we know this is happening, right? It's pretty obvious. We already got through the July FOMC meeting. We already had the liquidation event date 2.0 happen on August 1st. The U.S.-China trade agreement got an extension, right? So we kind of already saw that happening, and the U.S.-EU trade agreements, finalized. So all of this, happened in perfect fashion. Thankfully, there was a lot of good stuff, a lot of good things that came from this. Whether, not to bring politics into it, but whether you agree or disagree, I don't care. I'm just saying that the stock market reacted very favorably to these things. All right. So here's what I want to talk about: playing defense. Okay. This is what I was really hammering. I'm going to hold cash for potential opportunities or pullbacks. I'm going to continue holding overweight S-Gov position. All right. This has been my most unpopular video, the S-Gov position, and most unpopular buy, right? Most people are, constantly saying like, hey, holding an S-Gov in a margin portfolio is stupid, etc. And, in some regards, they'd probably be correct. If this was not a margin portfolio, in my opinion, holding S-Gov would be dumb. But because this is a margined portfolio, holding S-Gov, in my opinion, again, makes a lot of sense. I have previous videos on that. You guys can check that out. I don't really have any leverage position besides FU, which is an Ethereum 2x position. But I don't even have a stop loss on that. But anyways, these are the two that I really want to talk about: holding cash and being overweight in S-Gov. S-Gov is for protection mostly. Okay, so let's take a look at that. So here in the portfolio, all right, this is my S-Gov position. Okay, I am holding right now $60,000. And this is a flexible position. All right, I can add to it, I can take away from it. The point of this is it helps me sleep well at night in case we have these massive drawdowns, these massive swings. I'm not going to get, a margin call. So this is why I believe having an S-Gov position or something very extremely stable outside of an S&P 500 index is so critical. But if we continue heading lower, I have $60,000 I can cash out of S-Gov. So let's say we hit the bottom. Well, now I can be like, hey, let me cash out maybe half of this, and it gives me an extra $30,000 in buying power on top of the 18 I already hold. Okay, so again, this is how I'm looking at this. All right, I continue to hold cash and be defensive for this month because of the seasonality, all right, because of the changes that we're having right now. All right, so again, this chart, it tells you everything you need to know. Isn't it an exact science? Are we going to have these exact movements? No, we're not. But it at least gives you an idea on how you can better prepare yourself, how you can better, be ready to take advantage of opportunities as they arise. Again, this right here could potentially happen in September if we get the rate cuts. We could see this, and then there will probably be a drawdown of some sort, or it could just continue going higher. We don't know. Nobody truly knows. All right. So if anyone tells you that they know, they're probably lying out their butt. All right. So, okay. I think I hammered that home enough. All right. So let's talk about something else, right? I sold out of MSTY. I took a 10K loss, right? This is part of the portfolio update. So I ended up selling out of MSTY, and I am in favor of MSTW from Roundhill. Okay, I know there's a split, of people out there, and I know I made a video saying that I'm in MSTY, MSTR common stock, and I'm in IBIT. I still hold IBIT. The reason why I got out of MSTY is because I was becoming way too overweight in my MSTR linked ETFs, right? This has $24,000 in it. On top of the 50 something I already had in MSTY, it's just way too overweight. And if we continue treading lower, that is not good for MSTY, because it's going to be harder for MSTY to recover because it is a covered call ETF. All right. So if this drops 20% or so, it's going to require probably a 30 to 35% gain in MSTR for this to even get over the next hump, right? For it to even recover. So I sold out at close to a 20% loss on this ETF. So I lost about $10,000, give or take, but I'm using this money and redeploying it in other areas. Again, I am pretty heavy in MSTR weekly pay ETF from Roundhill. Again, this is a 120% leveraged exposure to MSTR, and it pays every single week with uncapped upside. This is not a covered call ETF. All right, so I am actually going through the full downside risk right now because as MSTR continues to drop, this is dropping even a little bit more. But for me, I'm bullish on MSTR. I'm bullish on MSTR long term. I think this MSTR is going to be one of the most valuable companies possibly in the world when it comes to crypto and Bitcoin specifically. So I'm very bullish on MSTR and I'm going to continue holding this. So, okay. Now we got the portfolio update stuff out of the way. All right, I showed you guys this for full transparency. Again, I don't want to hide anything. Again, I take my lickings just like you guys do. I take my losses just like you guys do, right? The important thing is what you do to move past that and how you react, okay? Yes, this is a 10K loss. However, I had to stop the bleeding because Misty is really like, I don't want to hold Misty if I have MSTW. So even though I'm taking that 10K loss, I'm redeploying it in other areas that I can get probably a better or a faster return over time. So that is why I got out of Misty. Again, also it's it pays every 4 weeks. So that is also playing against it in my opinion. Now, Misty, great ETF. One of the OGs of YieldMax. I have nothing, negative to say about YieldMax as a company. I think they're starting to become misunderstood by a large portion of the investors out there. But I'll be doing another video about that some other time, especially about an ETF called Ulti. You guys know what Ulti is. I'll be doing a video about that in the near future. All right, so what did I buy? All right, let's continue. How did this portfolio do? Well, we did pretty bad for the day, but what did I buy? All right, I'm now on X.com. So if you guys want to come check me out, there it is. Please check me out, Eugene Vasquez. But I did publish some of my stuff, all right? I had bought 22 shares of HOOW, 92 shares of XPAY, 113 shares of XDTE, 12 shares of IBIT, Bitcoin spot ETF, 15 shares of MSTW, and 100 shares of NVDW. All right, and I even said right here, I exited YieldMax Misty in favor of Roundhill MSTW. Now, one important thing I want to show you guys and this is why I harp on this so much. All right. I think if you guys have rocked with me for a while or seen a lot of my previous videos, you guys will understand this. For any new subscribers, any new viewers, you guys are going to understand why I preach the way I preach, or I teach the way I teach, or I talk about the things that I talk about. I always say, also before I'm on, Blossom as well. So if you guys want to check me out there, yeah, you guys can look me up. All right. I'm on Blossom Social. Okay. So the S&P 500, look at this. Over the last 5 days, it's not even down 1%. Okay. Not even down 1%. Okay. Whereas the last day, today, it's only down 0.5%. This is great. This is awesome, right? Look at it. For the month, it's still in the green by 1.5%, above 1.5%. So this is doing, the S&P 500 is doing really, really well. QQQ, the NASDAQ 100 is probably doing just as well. But this is why I talk about having your anchors in S&P 500 or index-based ETFs, something like XPAY, something like XDTE, something like VGT, okay? Because when these large market sell-offs happen, you can weather that storm. I can weather that storm. This is why I'm not that worried, because PLTW, NVDW, HOOW, and MSTW, these are single stock exposed ETFs. The risk is much higher for them. I always have said it is easier for the single stock ETFs, whether cover call versions or whatever other versions are out there, these Roundhill ones, they can fall fast 5 to 10% easier than an index. It takes more for an index fund to drop 5%. All right. You need something like a Liberation Day 2.0 to happen in order for that to occur. Okay. As you guys can plainly see, the S&P 500 is doing very, very well. All right. It's not even in the red over the last month, over the last 5 days. It's down under 1%. And over this last day, down, almost 6 basis points. So that right there is the reason why I harp on having more of an allocation to, the index funds. All right. And you guys will also know I follow a core satellite approach. Okay. This is where XDTE, VGT, and XPAY all live. All right, this is the satellite positions. This is where, you know, you have your NVDWs, you have your maybe a chippy even, you have your PLTWs, your single stock exposed covered call ETFs, whatever you want to call them, right? The point is these are much smaller in size relative to the entire anchor, to the core, right? And again, the whole reason for this approach is because I use margin, all right? I have to err on the side of safety, right? I am willing to give up, you know, higher levels of income for safety, all right? This is where this approach really, really shines, where it makes the most sense, you know, especially when we're having these wild swings like we're having right here, where people are just flocking out, getting out. You know, there's a lot of doom and gloom out there, a lot of fear. So I totally get it, right? But unfortunately, probably a lot of the investors selling out didn't even know what they were buying to begin with. All right. So anyways, guys, I think that'll do it for me. I just wanted to get this video out. Again, I bought the dip. I'm not going all in, right? I'm still holding a lot of buying power, still holding a lot of treasury. You know, I can sell out of that position. I can add to that position whenever I feel that the risk is on, or if I feel like we've probably bottomed out, I can deploy that, you know, that treasure chest of treasuries. All right. So anyways, guys, hope you enjoyed this video. Hope it was valuable. Hope it got the juices working in your brain and you can take a look at your portfolio and act accordingly. All right. But outside of that, guys, I will see you in the next video. You guys have a great day. Enjoy the rest of your week. And remember, you know, building wealth is a long-term game. So play the long game. All right, guys, take care.